It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, we are back with your Real Estate Property Podcast and the Australian property market, and streaming right now on Spotify and iHeartRadio. Yeah, breaking down all of the major real estate markets from Mackay to Runaway Bay on the Gold Coast, one of my favourite spots, plus the regional areas that you might be thinking about moving to. Now, if you want to get in touch, you've got two options. The first, you can leave a recorded message. Super easy. The link is below. Click on the link and start talking to share with us anything really that's on your mind. Doesn't necessarily have to be property. The second way to get in contact with us is via our email address, which is myrealestatepodcast@gmail.com. Hope you had a great weekend. It is a Monday, February the 23rd. New research out from the Regional Australia Institute tells us that Sydney residents are driving a significant migration to regional areas. 41% of people are considering a move due to high living costs and housing prices. Is there any surprise there? Probably not, but it is a massive number. And because the housing market is set to grow, what is that figure amongst Gen Zs likely to be in 5 years from now? Well over 60%, I'll put that to you. It's a brain drain out of Australia's largest city. And you've got to sort of add up how that's going to multiply, because you've got AI with all of these forecast unemployment numbers that are going to follow. So in 5 years' time, the landscape for Sydney will be very much a different one to the one that we're in right now. So let's right now take you to Brisbane and catch up with Melinda Jennison. She is a buyer's agent from Streamline Property. And good morning, Melinda. Welcome back for the first time for this year. We talk about Sydney, people moving into the regional areas. It is happening where you are. People in Brisbane are going into the regional Queensland areas.
It is happening to some extent from Brisbane into the regions, and it is a phenomenon that we're seeing across all capital city markets. And people are looking for some draw cards of those regions, including more affordable housing and cheaper living costs, because these are the things that capital cities can often make it harder for people to stay in capital cities at times where housing just keeps escalating in value.
Yeah, living costs, what a nightmare every time we're going to the supermarket. Yes, can we bring the cost of food down, please? Now, Brisbane's listing volumes, that remains well below average, with house and unit stocks down sharply compared to longer-term norms. This constrained supply, it does mean that buyers are often competing for limited choices, tightening pricing power and keeping market momentum strong even when sales volumes soften. What are some of your observations around this? How are the low listings shaping buyer competition in Brisbane as we speak?
Well, fewer choices for buyers simply means there's a lot more competition for quality homes. Now, new listings in Brisbane are down around 10% over the last 12 months. But total listings, that's the total number of properties available for sale, they're down nearly 26% across the same 12-month period. So we've got 25% less stock available for buyers, and yet we've got this surge in buyer activity that hasn't appeared to slow down. So that leads to less negotiating power, higher urgency. So when we see fewer listings, we see a lot of A-grade properties attract more buyer interest, and yet compromised properties, they're properties that might be in flood zones or sitting on main roads, they will sit on the market a lot longer because buyers are attracted to quality.
Yes, those A-grade properties that you're talking about, they're always hotly contested, and despite softer sales activities, Clearance rates and days on market show resilient demand. Brisbane's median dwelling values continue rising and properties are still often snapped up quickly, which is what you're talking to, with those auction results and low days on market really signalling buyers remaining pretty engaged in Brisbane at the moment. So if the sales volumes are down, this really does tell us that demand is still strong.
That's so true. So sales volumes over the last 12 months in Brisbane are actually down 3.7%. So some could look at that as a top-line data point and suggest that the market is softening. However, when we break that down in more detail and we look at those auction clearance rates, this time last year, auction clearance rates in Brisbane were sitting around 50 to 55%, whereas already in February this year, auction clearance rates are between 69 and 70%. So they're holding a lot stronger. And days on market have actually declined over the last 12 months. So this talks to the fact that properties are selling faster simply because there's fewer to buy, but there's more competition competing for the same stock.
Brisbane's market does differ because low listings and strong interstate migration does underpin that demand, as you say, helping property values climb even as Sydney and Melbourne show slower momentum, which is why Brisbane is still recording these price growths and behaving differently to Sydney and Melbourne.
Correct. So over the last month, the first month of January, we saw Brisbane escalate in dwelling values 1.6%. Now, compared to Melbourne, which changed 0.1%, and Sydney, which changed 0.2%, that's a very different price growth momentum. Now, of course, different segments of the market in Brisbane are performing slightly differently as well, and I'm happy to unpack that more.
And we are talking to Melinda Jennison there in Brisbane. We've got more talking about her market next.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, buyer-vendor sentiment. We cover it all every morning from 6 a.m. on the Real Estate Breakfast.
Now, I mentioned at the start that Sydney residents are leading the nation with this regional migration, with 41% considering a move. That is according to the Regional Australia Institute, and contrary to the stereotype of retiring baby boomers, 49% of Gen Z, that is aged between 18 and 29, are now the most likely age bracket to move into regional areas. Why? Well, they are motivated by financial incentives. They're seeking a better quality of life and opportunities, and they're moving away from expensive metro markets. Regional towns like Dubbo and Port Macquarie have emerged as top destinations for first-time buyers seeking that affordability, and those locations are no longer considered secondary but rather primary options for those seeking to escape the high cost of city living while still assessing employment opportunities. It is a Real Estate Monday and we are in Brisbane. Melinda is with us, and Brisbane's unit sector, we should talk about this because it has outpaced houses in recent performance, driven by tighter apartment supply, strong affordability relative to detached housing, and rising demand near transport and employment hubs, which really is positioning units in Brisbane as very attractive options. So units outperforming houses at the moment.
That is correct. And I believe a lot of this has come down to affordability pressures because housing's become less affordable and less accessible to a lot of people. So more buyers have therefore pivoted to units and townhouses. Now, for perspective, over the last 12 months, the unit market here in Brisbane has escalated 18.3% compared to the house market, which has increased 15.1%. Now, compared to other capital cities around Australia, both segments of the market have certainly outperformed, but the unit result here in Brisbane is unique to our city, and a lot of that has been caused by a lifestyle change, demographic demand for inner and middle ring locations, and that affordability pressure that I discussed earlier.
Yeah, and Brisbane's rental vacancy has to be said that has stayed near historic lows, keeping upward pressure on rents and reinforcing investor interest, where there is still plenty of that going on. Tight rental conditions coupled with sustained tenant demand really does contribute to that rental growth that supports overall market confidence. Rents are always a talking point. I put that to you, Melinda, in Brisbane's rental market.
Yeah, that's so true. And, it's a tough gig for people that are tenants looking for rental properties, because if they're looking for houses, rents have escalated 6.3% over the last 12 months. But if they're looking in the unit market or the townhouse market, it's even worse. Rents have escalated 6.8% over that time frame. So when we talk about those cost of living pressures, as rents increase, it simply means that a higher portion of take-home income is going towards housing costs. And that's hard for some people in some markets around our city.
You were saying to me before we got going off air that you've been incredibly busy. Despite what is going on, the movement of different property markets around the country, every person that I have spoken to since the start of this year have said to me, I have never been busier.
It is a very competitive market, especially here in Brisbane. And a lot of that is coming from urgency and that fear of missing out from buyers. As a buyer's agent team servicing Brisbane, we are experiencing higher than normal demand for our services. And I think that's because people are looking for a competitive edge. They're looking for off-market opportunities simply because listing volumes are so low. And they're looking for certainty, guidance, reduced risk and pricing confidence before they submit an offer on anything that does come to market, because it's quite often very competitively sought after with multiple offers, or if it's an auction campaign, there's multiple registered bidders. So there's not much opportunity for one-on-one negotiating in a market like we have here in Brisbane at the moment.
I mean, it's such a hot talking point, Brisbane. There's a lot more fuel to be dumped onto the fire in 2026. One gets the impression, especially with the unit market, as we've talked to. All right, well, we'll leave it there on our Monday. Melinda, enjoy getting out there, interacting with all of the people that you're talking to. Thanks for coming back onto the Real Estate Breakfast, and have a great Monday.
Thanks so much for having me once again. We'll talk to you again soon.
Stay ahead of the competition with the latest news, insights, and data analysis on the Property Podcast that keeps you informed.
You should be picking your buyer's agent on their expertise, as opposed to other agents where you know they can't do a deal to save themselves and you have to wait till auction.
So, in our book at the moment, we have quite a few, almost $400 million. So one of them has a 44.5 million to about 150 million. So the vendor doesn't want to go on the market and the buyer doesn't want to buy from the market.
For homeowners, we see it sort of being a really positive outcome because it's equity gains are being retained rather than lost. We see values are really being supported by genuine demand, not really short-term speculation.
Get your statements, get a highlighter, go through and highlight, where have I spent my money? What can I cut my expenses out? Where could I increase my budget? So, I'm pretty big on that.
There is always going to be a risk factor, and I think just given what I was saying about the politics, that is always in the back of everybody's mind as well.
Of course, the residential market in Dubai has enjoyed a price bull run for more than 5 years now. But one of the things we are keeping a close eye on is the rising volume of residential supply. Now, for the next 5 years, we're tracking about 350,000 homes that could potentially be delivered by the end of the decade, which works out to about 70,000 homes a year.
We connect you to the best real estate information across Australia. The Real Estate Podcast.